Hi, everyone. Welcome to our webinar today on charitable giving. My name is Hope Carlson, and I'm a lead advisor here at Dowling Yahnke Wealth Advisors. On behalf of my colleagues, we are so delighted to have you with us today. I'll tell you a little bit about Dowling Yahnke for those of you who may not be as familiar with us. We were founded in 1991, which means that this year is our 30th anniversary. And one of the things we are most proud of is that we are and always have been fiduciaries, which means that we put our clients' best interests ahead of our own. We manage about $5.7 billion collectively for more than 1,300 clients, mostly individuals and families, and we provide comprehensive financial planning services. One topic that we frequently discuss with clients is charitable giving, and this is the season for it. So I am so pleased to welcome Shawn Jensen from Schwab Charitable. Shawn has been with Schwab Charitable since 2018. And prior to that, he worked in banking for a number of years, as well as in the nonprofit sector, where he focused on capital campaigns, strategic partnerships, and fundraising for educational programs. So he really understands all perspectives at the philanthropy table. Shawn also holds the Chartered Advisor in Philanthropy designation. Shawn, thanks so much for being willing to join us today to answer some questions. And thank you to all of you who are watching who submitted questions in advance. If you have additional questions, you can submit them using the Q&A button at the bottom of your screen, and we'll get to as many as we possibly can. Shawn, I'll start by asking you about one of the main areas that we have received many questions about, and that's donor advised funds. Can you tell us a little bit more about what a donor advised fund is and how it works at Schwab Charitable?
Absolutely. And first of all, thank you, Hope, for having me today. It's really a pleasure to meet with you and be able to speak with your clients about this important topic today. In the simplest of terms, a donor advised fund account is an investment account specific for charitable giving. So a lot of clients might have IRAs or 401k plans for retirement or 529 plans for college savings. You can also open up a donor advised fund account for charitable giving. The donor advised fund account is simple, easy to open. There's no cost to set one up. There's no minimum contribution to get it going. And it enables donors to contribute cash or non-cash assets for an immediate charitable deduction if they itemize. Clients will typically make contributions to the donor advised fund account in the years they need the deduction most, whether they experience a liquidation event or simply have a high income year. Once the money's in that donor advised fund account, they can increase their future giving power by having the funds invested in their charitable account for potential tax-free growth. And then in the future, they can recommend grants of $50 or more to their favorite charities. And they can do this at the time that's most meaningful to them. So the donor advised fund account creates flexibility and timing. As we say, where a donor can separate the tax event of when they put the money into the donor advised fund account and get the deduction, and the giving event of when they actually make distributions out to charity. The account also is just a nice organizational tool that puts all the giving in one simple place that's easy for them to access.
Thank you. That's a great overview. Can you talk about some of the best practices for how people leverage their donor advised fund accounts?
Yeah, and overall, one of the biggest takeaways we want donors to think about is how they fund their giving. So while most Americans will write checks or use credit cards to give to charity on a regular basis, it's not the most tax-effective way to give for most investors. The IRS has made it advantageous for people to give appreciated investments and assets to charity. So for clients, if you have appreciated investments in your portfolio that you've held for a year or more, you can donate these shares directly to charity and claim a fair market value deduction and avoid paying capital gains taxes on the sale of those shares. So you're able to lower your tax bill and, depending on the cost basis of the shares you donated, increase the amount available to give to charity by up to 20%. This is because when a charity that receives the gifts from you, they're a nonprofit and they don't have to pay capital gains tax when they liquidate the assets you've given it. So it's a win-win for both the donor and for the charitable organization. The donor advised fund account makes this process even easier for both clients and for charities. Not all nonprofit organizations are set up to accept stock, are set up to accept real estate or other assets. So clients can easily make contributions to their donor advised fund account and then make grant recommendations to the charity of their choice. The tax process is exactly the same. The client gets that immediate deduction. They don't pay capital gains taxes, and the charity receives a check in the mail. So again, more money to the charity, less taxes in capital gains tax, that full deduction up front, and again, a win-win for the charity and for the client.
Can you talk a bit about how it works when the charity receives the check? How do they know who it's from? And is it possible to give anonymously?
It is. So when a client makes a grant recommendation, the first thing they'll do is search for the charity that they're looking to give money to. From there, they can decide if it's going to be a one-time gift or a recurring gift. We've been encouraging donors that are supporting charities to set up recurring gifts because that stream of ongoing support and income for charitable organizations is so important, especially during times like 2020 and 2021. Once the amount and one-time versus recurring gift strategy is selected, the client can choose what the gift is going to be used for. So they can create a special designation for the gift or leave it to the charity to decide how to use the gift where it needs it most. And then you can go on to choosing how you will be recognized for the gift. So each donor advised fund account has its own account name. Mine, for example, is the Jensen Family Charitable Fund. And when you make a gift, you can decide if you want your special account name listed, also your personal name. You can list your personal address if you want. And then another special note if the gift is in honor of somebody or another message you'd like to leave with your gift. You can also limit that information. So some folks might want to just make the gift in the name of their special account name, and some might want to make the gift anonymous altogether to preserve their privacy.
That's really helpful. So that also may help clients who have a one-off charity they'd like to support, but they may not want that additional mail requesting additional gifts down the line.
Absolutely.
That's great. Are there any watch-outs or pitfalls that you would caution against with donor advised fund giving?
Yeah, so when you put money into a donor advised fund account, again, you're making an irrevocable contribution to Schwab Charitable, which is a 501c3 public charity. You get that full income tax deduction up front. And so therefore, funds in the account have to be distributed 100% to charitable organizations for charitable purposes. So clients can grant to any 501c3 public charity that's in good standing with the IRS, a house of worship, a government entity such as a state park, just so long as it's an organization that's an eligible charity in the eyes of the IRS. And then the second part is the gift itself has to be 100% tax deductible. So no more than an incidental personal benefit can be received in return for a gift made to a charitable organization. So for some charities, you might make a gift for an annual membership that might include free parking or a keychain or coffee mug. Totally okay. However, there are other types of benefits that can be received that would make the gift not 100% tax deductible, which could include gala tickets, raffle tickets, things of that nature that have more of a monetary value associated with them.
That makes sense. Are there any assets that people cannot or shouldn't donate to a donor advised fund?
Yeah, the most common type of asset that we get asked about would be retirement assets. So folks who are 70 and a half or older are eligible for qualified charitable distributions from their retirement accounts, which are known as QCDs. And QCDs cannot go directly into a donor advised fund account. They have to go directly to what the IRS terms an end operating charity. There are other assets that clients are holding that they may not make a great asset to put into their donor advised fund account or gift to charity in general. So again, highly appreciated assets do make a really great gift or asset to give to charity because of the tax benefits, but you have to have held those for over a year to get that capital gains tax benefit. At Schwab Charitable, we also are able to accept other complex assets like real estate, ownership in a business, cryptocurrencies, and a large array of other assets. Some of these assets might have characteristics associated with them like debt that could make them less optimal for charitable giving. But we have a team that can vet those and do due diligence and make sure clients are led down the right path.
That's great. We received one question from someone who says, once you have set up a donor advised fund, is there a time frame during which you need to grant the money out to charities? How long can the money stay in the donor advised fund?
Great question. So for Schwab Charitable, during an account holder's lifetime, there's no annual minimum distribution that's associated with the account. So the client really has full flexibility on when they distribute the assets out to charitable organizations. Our program policy requires that clients keep their accounts active, and we define that as making a gift every 2.5 years. And again, that minimum gift amount is $50. So as long as a client's making a gift every 2.5 years, the account will remain active, and they can then make larger gifts at times that are meaningful to them.
So can we talk a little bit more about that succession plan? What happens after the primary account holder passes away? How do people determine where the funds go and how they're administered after their passing?
Yep. So the donor advised fund account is such a flexible tool, and the succession planning element really highlights that. So each donor advised fund account has its own what we call succession plan on file. And that's an instruction from the client or account holder that Schwab Charitable will follow once the last account holder passes away. Before we even get to that, it's also important to note that account holders can always be added to an account during any time. So as, let's say, a husband and wife have a donor advised fund account, if their children get older, the family can then add those children onto the donor advised fund account. Then in future years, that next generation could actually be added onto the donor advised fund account. So these can actually go on in perpetuity without a succession plan ever being enacted, just by the activity of adding additional account holders over time. However, for planning purposes, account holders can create custom succession plans for their donor advised fund account. And this can include naming charitable organizations that could receive a one-time gift. They can name charitable organizations to receive a stream of gifts that goes beyond the donor's lifetime, or successors can be named to take over the role of account holder for the donor advised fund account. So as you can imagine, we see families put together really complex plans that could include a combination of these succession options. There may be certain charities that the original account holders want to support, and they know that the successor they'd like to name might not want to support that organization as something that's important to them. So they may set up charitable beneficiaries that would receive, again, either a one-time gift or a stream of gifts into the future, and then another percentage to go down to a successor donor where they would take on the giving going forward from that point. Another benefit and flexible component of the donor advised fund account is that because Schwab Charitable, we're a 501c3, clients can name their donor advised fund account as the charitable beneficiary. And this can be named in their living trust, on a charitable remainder trust, on their retirement accounts or life insurance. So it makes integrating charitable giving into estate planning very easy.
That's really great. And I love that you also mentioned adding account holders who are part of that next generation. I work with a family where the first generation and the second generation jointly administer their donor advised fund, and it sparks so much joy for them. It's really wonderful to see. That's great. I'm sure you have many experiences with other clients across the Schwab Charitable spectrum who are doing something similar. Have you seen anything that has been particularly surprising to you or innovative to you in how families have approached this?
Yeah, a couple things come to mind there. So first, what I just said is something that for some reason escapes people's minds. They add their kids as successors onto the account so that they would take it over after the parents pass away. But we constantly are reminding people, you don't need to name them as successors. They can be added as account holders now and start participating in the giving now as opposed to later. So that's one thing I always remind families of. And another thing that people don't think about is that funds can move from one donor advised fund account to another without any tax implications. So we see some families might have a general or master DAF account where everyone in the family is involved in the decision-making process of where grants will go and when, and they might have meetings around that grant-making process. But they can also then establish sub-accounts, sub-donor advised fund accounts for the kids where they can run those accounts on their own, make grant-making decisions on their own, start their own traditions. If they have kids, obviously they can be involved in that donor advised fund account. And that master or general DAF account that the parents set up can fund those sub-accounts very easily. So that's something that's really cool. And then we hear about family get-togethers or meetings where the family gets together and discusses how those individual donor advised fund accounts have been operating, what charities the kids have been supporting, how did they come up with those charities, and how are they kind of tracking the results or staying in touch with them, and what future plans are. So it really allows more collaboration around a comprehensive giving together on that master account, but then also having the sub accounts underneath where you can move money to those and then let the kids grant out on their own.
What a neat way to involve the next generation and beyond in philanthropy. That's really great. Can you talk about the logistics of that a little bit? How do the fees work on something like that? Do each of the sub accounts have their own fee structure? Is it aggregated under the master? And what are the fees for the donor advised fund at Schwab?
Yeah, probably we should start at the general fee level first. So a donor advised fund account in general, this could be at Schwab or any institution, is going to have two different fees associated with it. The first is the administrative fee, which is what the DAF provider, in our case, Schwab Charitable, charges to run the account. So it includes the account setup, all the granting activity that goes out of the account, record keeping, tax reporting, etc. And our administrative fee is a tiered fee schedule that starts at 60 basis points on the first $500,000 in the donor advised fund account. The next $500,000 charges an administrative fee of 30 basis points. The next $1.5 million is 20 basis points, and it continues to tier down. So the larger the balance, the lower the effective administrative fee rate is. The second fee associated with the donor advised fund account is how the funds within that account are invested. So we actually offer two different investment programs. The first is called the core account, and this is a model investment program that Schwab Charitable offers. So when clients make contributions to a core account, they have 15 different investment pools to choose from that we offer. So those could include index funds, asset allocation pools, actively managed pools, and the client gets to pick and choose how they want their funds distributed across those investment options. The investment fee on the core account depends on the investment choices that the client chooses. So for example, an index fund might have a fee of 3 to 6 basis points, and some of the actively managed pools might have higher expense ratios, but the client gets to choose. For clients that are looking for a more robust investment offer, they can appoint their advisor at Dowling Yahnke to manage the assets for them. And so that's a really nice option for somebody that's looking for an investment strategy that mirrors maybe one of their brokerage accounts, or is completely different and has more of a socially responsible lens to it. And they can work with their advisor on what their investment strategy is and discuss a management fee for that process.
I should note that, sorry to interrupt you, Shawn. I would just add there that we do have a minimum of $100,000 in the donor advised fund for it to be managed by Dowling Yahnke.
Correct, and that's a special arrangement for Dowling Yahnke clients, which is great. And to the first part of your question, if there are families that have multiple donor advised fund accounts, we can household those accounts for a fee perspective. So taking into consideration the full balance of all the donor advised fund accounts for the administrative fee.
That's great. And is there a minimum fee level for someone who has a very small donor advised fund?
There is a minimum fee level of $100, but again, that would be that's an annual fee, And we're actually looking at that right now as potentially getting that removed. But as of right now, it's still $100 minimum fee.
That's great. And speaking of minimums, is there a minimum to open a donor advised fund or to contribute?
There is not. So we're really happy that the donor advised fund account is available to anybody interested in a charitable giving vehicle. So no minimum amount to open the account, no minimum that needs to be maintained in the account. And as the account progresses, there's no minimum additional contribution amount. So anytime you want to make an additional contribution to your account, you can do so at any level.
Thank you. For all of you who are part of our audience today, I want to just pause for a moment to say thank you so much for all the questions that have been coming in. Keep them coming. We'll keep asking Shawn for as much time as we have here. I'm going to shift gears now away from the donor advised fund piece, but if you have questions on this, please keep sending them, to what you had mentioned briefly in passing, which is the qualified charitable distributions. Can you talk a little bit more about how that works?
Yep. This question comes up all the time, so it's really important to discuss. For individuals, again, that are over 70 and a half years old, they can make a qualified charitable distribution of up to $100,000 from their IRA accounts directly to charity each year. As I mentioned earlier, the donor advised fund account does not qualify for that. So this is a way for clients to, on an annual basis, support the charities that they wish to support annually, again, because it's a one-time gift. It's out of your retirement account directly to that end charity. This gift action does not create an income deduction, but actually allows the individual to avoid recognizing that income altogether. So this is a very efficient giving strategy to support, the annual giving of the charities that clients wish to support. And is available again starting at age 70 and a half. There are some other considerations for retirement accounts as well, just because this is an asset that a lot of people are holding. So those who are 59 and a half who itemize, if they're taking withdrawals from their retirement account, a charitable gift could be a deduction that would help offset that tax burden. And also for those who itemize, if they're looking at a Roth conversion, a charitable deduction could be a strategy to offset that tax burden. And then again, as I mentioned previously, donor advised funds can be named as a charitable beneficiary of an IRA. So a couple of different things to think about there with those retirement accounts.
All good strategies. Just to clarify though, someone who is not yet 70 and a half cannot do a qualified charitable distribution, right? So that
Correct.
Charitable deduction you're talking about for those withdrawing from their IRAs, they would take the cash and then donate that to the charity.
Correct.
Okay, great. And sometimes my clients get a little confused about how exactly to make a QCD. And so if you have questions about that, you can talk to your advisor, but certainly the Dowling Yahnke, we fill out all the paperwork for you, you sign it, and Schwab is very good at just mailing the checks directly to you. They're made out directly to the charity, and you can give them to the charity yourself as part of your giving. One of the other pieces that I wanted to ask about is for clients who are taking required minimum distributions at age 72, which is when that kicks in right now under current legislation. When they do their QCDs, that fulfills the RMD as long as they haven't taken the RMD first, right?
That's right. So this is, as I mentioned, a very efficient way for people to give that might not need that income from their retirement accounts on an annual basis and do have charities that they want to support regularly. It's just a way to divert those assets directly from their retirement accounts to the charities of their choice. Obviously a win-win that the charity gets the support from the client and the client doesn't need to recognize that income. So it makes it a tax efficient way to give. And we see people complement other giving strategies with their QCDs. Again, QCD is going to be more beneficial for those annual gifts where you're just supporting charities regularly. And then maybe you use a donor advised fund account or another giving strategy for mitigating capital gains tax consequences that would happen from rebalancing your portfolio or a liquidation event that occurs.
That's great. Well, and shifting gears yet again, the CARES Act is something that is unique and special for this year, right? As we're looking at some giving, can you talk about a piece of that that is particularly impactful for clients who are making those cash gifts this year?
Yes, and you said it, this is specific for cash gifts. So there are some tax incentives for charitable giving that were provided in the CARES Act, which was originally set up just for 2020, but has been extended through the end of 2021. And we definitely encourage people to take advantage of this while it's available. There are two different tax benefits for charitable giving listed in the CARES Act. So first of all, for those who are not itemizing, there is a charitable benefit for you. So individuals taking the standard deduction can claim an additional deduction of up to $300 for cash gifts made directly to end operating charities. And for married couples filing jointly, they can claim an additional deduction for up to $600 for cash gifts directly to an end operating charity. For those who do itemize, the second provision in the CARES Act for charitable giving gives donors an option to elect up to a 100% of adjusted gross income deduction limit for cash donations to operating charities in 2021. And any amount above that 100% limit could be carried over for up to 5 years. So that's a specific person that this might really work out for, but it's a great benefit for those who it does work for. And again, with both of these options, they have to be cash gifts, they have to be made in 2021, and they have to go directly to a qualifying public charity, which does not include, by IRS rules, a donor advised fund or private foundation.
Mm-hmm. I think that's such a powerful strategy for 2021 in particular. I know that I've worked with some clients on figuring out with their CPA, how do we optimize this year? Is it better to do stock? Is it better to sell the stock and donate the cash because that increases the adjusted gross income, but then it offsets with the cash gift? So some of my clients have been very strategic about how to maximize that deduction. And I think it's been a very helpful way to make an even greater impact on the end charities. One question that's come in is, can you define a little bit more what is meant by an end operating charity?
Well, when you make a gift to a donor advised fund account, that is an irrevocable gift. You are releasing control legally of the funds that you put into your donor advised fund account, but you still are an account holder recommending activity of how the funds are going to be used. So both for investment purposes and when and to what charities they will be designated. So the IRS does not see that as control, but when they're making gifts, when they designate the term gifts to an end operating charity, it means a complete outright gift where the donor completely releases control, does not have any decision-making authority over those assets going forward.
Thank you. Another donor advised fund related question that's come in is, if someone gives highly appreciated stock to the donor advised fund, is it sold immediately and then they have to pick from the available investment options in the core option where it's not being professionally managed? How does that work?
Great question. This comes down to the investment program that the client selects. So first we'll start with the core investment program. And in this offer, when clients make contributions of stock, they will be liquidated immediately upon being contributed to the donor advised fund account. So just for the example of an Apple stock that's contributed to a donor advised fund account, we'll assume that the client's been holding it for over a year before making the contribution. They'll move those shares into their donor advised fund account and they'll get a deduction immediately for the current fair market value of that stock. Then Schwab Charitable, as a 501c3 public charity, we will liquidate, we'll sell those stocks. And because we're tax exempt, there's no capital gains tax to be paid. And the proceeds would then be available to be invested across those 15 investment pools. And so that's the core account offer. For the professionally managed account, where an investment advisor is appointed to manage the assets, there is an ability for clients to contribute stock and have them held in the account for a period of time. Schwab Charitable, we do have investment guidelines that the advisors must follow. So there's concentration and diversification protocols that must be followed, but it is possible to contribute stock and have it held in that account. Otherwise, the advisor can sell and reinvest the proceeds according to the investment plan that the advisor and client come up with.
And just to be perfectly clear, let me clarify for folks, there is no capital gains tax for the donor or client once that stock is sold inside the donor advised fund, right?
Correct. And again, I think it was how I started one of my first questions. If there's one takeaway, we can get people to really think about when they start thinking about their charitable giving strategy is no gifts of cash in the future. If you have highly appreciated assets in your portfolio that you've held for over a year, you can use these to fund your charitable giving, getting a deduction for the current value of those assets and not having any capital gains tax consequences. So more money to give to charity, higher deduction amount. And again, the charity gets more in the end. So it increases your giving power and increases your impact.
That's really helpful. Another question that has come up is around how you can make grants out of the donor advised funds. Can you talk a little bit more about that process and what do I do if my charity that I really want to donate to is not listed in the drop-down menu?
Yep, great question. So first of all, there's two different methods for recommending a grant from your donor advised fund account. We do have a paper form that clients can fill out and submit to us, but majority of clients are using our online portal, which is very simple. I would also just remind everybody that a donor advised fund account, even though it's held at Schwab Charitable, it's integrated from a technology experience into your user experience on schwab.com. So going forward, if you open a donor advised fund account, when you log into schwab.com, right there on that landing page on the account summary screen, you're going to see this donor advised fund account listed there. When you click on the donor advised fund account, it will then take you to a new window where you can input various activities for your donor advised fund account, including recommending a grant to charity. So when you do request to recommend a grant, a search box appears and you can type in the name or tax ID number of the charity you wish to give money to. We have a pretty extensive list of charitable organizations. There's hundreds of thousands of them in our database, but there are quite a few charitable organizations that are eligible to receive gifts in this country. So there are times where you may search for a charity and it's not listed in our database. In that event, there is a button that you can click that says add organization information manually. And we request that the donor give us as much information as they have so that we can contact the organization. So if you have the name of the organization, the city they're located in, and perhaps a phone number, you would input that information into the system, and we would then reach out to that charity and make sure that they're IRS eligible to receive a gift from the donor advised fund account.
Thank you. And how quickly does a charity receive the gift once I make a recommendation?
It's about 5 business days for the check to be processed in the mail, 3 to 5 business days, and then normal mailing time. We do have ability to send gifts by wire or by UPS if there's some sensitivity around the gift. I know last year, for example, a lot of charities had to pivot and work remotely, move to different locations, and the mailing addresses were changed. So for some folks that were making larger gifts, we reached out to the organization and got wire instructions just to be 100% sure that the funds got there okay. But generally they're sent by regular mail. It takes about 3 to 5 business days to process the grant.
That's really helpful, especially as many charities have year-end campaigns or matching deadlines. That's good to know.
Yeah, just on that note, for clients that have donor advised fund accounts, when you make the gift out of the donor advised fund account, it's not a tax event. You're making a distribution. You've already received your income deduction. However, for some charities, as you mentioned, it's important for them to receive gifts at the end of the year by December 31st. They might have campaigns. There's a matching gift program. So for those who do want to make a gift to a charitable organization and have them receive it before the year end, we're recommending all clients to make those recommendations by December 1st. Again, the end of the year is a very busy time for charitable organizations, and to be absolutely sure, it's just recommended to plan accordingly and act quicker than you might think.
That's good to know, especially with holiday time off for folks.
Yeah.
Can you talk a little bit about some of the trends you are seeing with the charities? What are you hearing from that side?
Yeah, great question. Charitable giving as a whole, on a macro level, is at an all-time high. Year after year, we're seeing charitable giving growing. But that doesn't mean that charities aren't still in great need. So for starters, as I mentioned, like all businesses, nonprofit organizations had to, pivot and act nimbly over the last couple of years. And so charities, first of all, are asking for relief from donors in the way of receiving grants that are not restricted or specified for a specific purpose or program. And this just provides these nonprofits greater flexibility in how they can fulfill their mission. They might have some, additional expenses or different ways that they need to operate that are a little different than pre-pandemic times. And we've seen Schwab Charitable donors respond to this. Last year, we saw about a 45% increase in the number of gifts that went out that were not restricted compared to the previous year. Another topic that we're hearing from charitable organizations is the redistribution of support from donors. So clients that maybe in the past supported environmental issues or the arts might have redistributed some of their charitable dollars to some more headline need that was out there the last 2 years, whether that's coronavirus support, natural disasters that seem to have been occurring more and more regularly. So we're just encouraging people to continue to think about the charities that they've supported on a regular basis and to continue to support them, because some of their donors might have shifted their focus, but also some of those organizations haven't been able to fundraise in the same way that they had in prior years. We're just getting back to holding events. This one's still virtual, but some charities are starting to have in-person events, galas, et cetera. But for some organizations, that was a big source of revenue for them. And the last couple of years, they weren't able to do that as effectively.
For sure. It's been a challenging couple of years across the sector. One of the keys that I've been hearing too is that there's increased demand for services for many of our charities. And so there's that pull for additional support as well required in many different pieces of the nonprofit universe. So that's really helpful. It's great to know how Schwab Charitable donors are responding. Yeah. Can you talk to a little bit about the whys of giving? So one of the things that we do a lot at Dowling Yahnke is we don't just focus on that technical side, the how do I give, how can it be most tax efficient? We also have a lot of values-based conversations with our folks and figure out how to help them connect and communicate throughout their families. We have a whole legacy and philanthropy initiative around this. Can you talk about some of the tools that Schwab Charitable has to help couples and families engage in these conversations?
Yes, we are very proud and happy to announce that we recently just created the Schwab Charitable Giving Guide as a new resource for clients and really anybody. It's available on our public website to anybody that accesses it, which is schwabcharitable.org. And this giving guide was designed to help donors think through their charitable giving strategy, basically with the intent to be more thoughtful about their giving and potentially facilitate family conversations as well to get more people involved in it. Somehow I didn't mention earlier that at Schwab Charitable, we're, again, a nonprofit organization. Our mission as a nonprofit is pretty simple. It's to increase charitable giving in this country. And we want to do that by encouraging people to be more thoughtful about their giving. If they put the same amount of thought in their giving strategy as they did their investment strategy, they'd probably be able to get more money out to the charities of their choice. So this tool really helps people think through that lens. So donors using this tool, they can focus on different sections that are meaningful to them. For some, they might want to go through the entire guide. But others may want to just dive into different sections of the giving guide which could be identifying their charitable goals, creating a giving budget, or finding and vetting charities, which is really important to a lot of families. What I like about the guide, and kind of speaks to the why that you were just talking about, is it begins with identifying the values and causes that are most important to families. And it includes fun activities that you can do. You actually participate with this guide, it's interactive. And as you complete each activity, the answers and progress get consolidated and output through a giving planner that you can look at, and it gets updated regularly as you change some of the activity that you have in the giving guide. So, just as you would encourage your clients to complete a financial plan, we like to encourage our clients to participate in the giving guide and create a giving planner, and visit it regularly, just like you would your financial plan. As sometimes your circumstances change, your personal passions change, and so always updating that charitable plan we find to be very important. But yeah, Hope, I'd love to hear more about the legacy planning conversations that you guys have.
Sure. Yeah, it's a really rewarding conversation. We love it. We join families to help facilitate those values-based conversations exactly as you're describing in the Schwab Giving Guide. And we customize it for every family, but it allows folks to have that approach of, are we on the same page? Do we have the same giving priorities as a couple? What might be different in terms of where we're giving now and where we actually want to be giving? What are the different categories of giving that we have, from a more strategic perspective to a responsive philanthropy to something that we're engaging in because, the neighbor comes and says, well, I'll buy a ticket to your gala if you buy a ticket to mine. And how can we help people put some structure around their philanthropy as well? And then also we think about it from a multi-generational perspective as people look to involve their children in giving and think about their priorities for what is meaningful to them as a family in philanthropy. And I think that is one of the neatest ways too that the Schwab Giving Guide can help, especially as we enter a time in the calendar year when families are gathering more and more. Some of these conversations arise naturally, and some I know families are deliberately scheduling around a holiday gathering where they're setting some time aside to say, let's sit down and talk about our philanthropy. Let's talk about what wealth means in our family. Let's talk about legacy and what values we want to pass on in addition to the financial resources. So all of that, I think, is such a wonderful way for families to gather and engage. And I love that Schwab is providing this giving guide too as a way to help provide the tools for those types of conversations. As we look at that broad multi-generational conversation, do you have any particular stories that you would think about sharing that are interesting or unique, ones that you've seen arise among the Schwab charitable community?
Well, I was thinking about the comments you were just making about the holidays coming up and people having family meetings that they may want to bring up charitable giving during this time. I mean, obviously we feel blessed and we want to give back during the holiday time. And it's a good time for families to get together and have this conversation. And I really like how our giving guide starts out with, again, how to involve your family and how to identify values. And I was looking at some of the activities and questions that are listed in there that people can use for these types of conversations, just because it's not every day that you are having this conversation for the first time. And it might be nice to have some questions written down that you can get your children to think and potentially provide feedback. And it usually starts with mom and dad or whoever the matriarch, patriarch of the family are, and they may have a personal history of giving. So sharing first about your motivations to give, what inspired you to give, and what your experience has been with charitable giving and the role charitable giving has played in your life. Some other things to consider are gifts that were either given or received. So some people might have been the recipient of a charitable gift during their lifetime, and that's been very impactful to them. And that could shape your future of wanting to give and also inspire your children to give. Sharing with children what your personal history is of giving to specific organizations. Do your kids know why you're giving to that organization? Have you shared with them any of your motivation to be supporting that cause. It'll be interesting to see if the kids do know or don't know. If families have been giving for generations, which some have, maybe sharing stories of generations past that the children might not be aware of and how that's shaped an impact within the family. Or just, meaningful stories that you can think of that could it doesn't always have to involve a financial gift. There's a lot of ways to participate in charitable giving, which could be volunteering time, talent, etc., to charitable organizations. So I think there's some really cool tools in this guide that will help you have this conversation.
What a neat way to spark some conversations about family history that can be passed on. We will send out a link to the Schwab Giving Guide as part of our follow-up email with some resources after this call. So for those of you who are wondering where you can find a copy of it, we'll be sure to put that in the follow-up email. We also received a question about charitable bunching and whether you could talk a little bit more about that strategy. How does that work? How does a donor advised fund play in? How does it partner with that Roth conversion that you mentioned earlier or other big tax year events?
Yep. So bunching or concentrated giving, there's a couple different terms for it. That really came about and gained popularity after the Tax Cut and Jobs Act was introduced, and the amount required to itemize your tax deductions was essentially doubled. So some donors found themselves in a place where they're giving to charity in the past, they want to continue giving to charity, but they find that their total of their itemized deductions is slightly below the level of the standard deduction. So they want to continue giving, obviously, but is there a way to do it and get a tax benefit for the charitable giving activity? So for a lot of people, they looked and they saw it could be beneficial for them to bunch or combine multiple years of giving into a single year. So for example, taking 2 years of giving for 2021 and 2022 and combining them into 1 year, 2021. And so on the 2021 tax return, you have an elevated charitable giving deduction. And so your overall deduction allows you to itemize and get a larger charitable tax deduction and overall deduction amount. So in addition to achieving that large impact in 2021, the strategy also allows you to produce a larger 2-year deduction than you would if you just continue to give at your normal levels and took the standard deduction over those 2 years. What the donor advised fund account does is allows you to support charities in the same manner you would normally. So in 2021, you can make a large gift to your donor advised fund account, and you'll get that upfront deduction for the gift you make. And then you can spread the giving out of your donor advised fund account to the charities of your choice, again, in 2021 and 2022. So your giving pattern remains the same, but you were able to lump a couple years of giving into a single year to get that large itemized deduction in the first year, and then taking the standard deduction in that second year.
Thank you. That's very helpful. Speaking of a big tax year, some of our clients are thinking about selling a business and are wondering about the benefits of charitable planning in advance of that business sale. Can you talk a little bit more about that?
Yep, and I'm glad you said in advance of that business sale. That's the key there, and planning. So for many people, real estate and business ownership is the largest asset they have, the largest source of wealth that they have. And it also may be an asset that's very highly appreciated over the years. And when it comes time to sell that business, sell that real estate, there's going to be a large capital gains tax exposure that's going to be evident there. So with proper planning, clients can consult with Schwab Charitable or other charitable organizations for that matter, and potentially contribute a portion or all of that asset to the charitable organization before the sale occurs. That whole portion of ownership that goes to the charity will be eligible for an immediate deduction based on the current value of the asset. And at the time of sale, there would be no capital gains tax on the part of the ownership that went to the charity. and the proceeds of the sale would fund either the charitable organization or a donor advised fund account. So this could be a way for a family that's potentially selling a business to set up the family for many years of giving, or even potentially many generations of giving, by contributing a portion of that asset up front to a donor advised fund account. It does take some planning. One of the key pieces there is making sure that the charitable gift is completed prior to any sales contract being completed. So no binding contract can be in place. Otherwise, the IRS sees that as an assignment of income and not a charitable gift. And so the capital gains tax benefit would be voided. But this can create, again, a great capital gains tax relief for a client that's looking at this type of transaction, and also fund many years of charitable giving for years to come.
That's great. Thank you.
Mm-hmm.
Another question related to donor advised funds is, if two people, a husband and wife, are trustees on the donor advised fund, can they still name other successor trustees, and how many successor trustees can be named?
Yeah, so we're very, very flexible in succession planning for donor advised fund accounts. So an account itself can have up to 4 account holders at any given time and 6 additional account users. Those account users have access to the account. They can make grant recommendations out of it. But upon the passing of the account holders, account users do not assume the role of account holder. So I just want to make sure that part's clear. If one account holder or 2 account holders pass away and there are other remaining account holders, they would assume the role of responsibility and continue the account moving as it was. The account can have multiple successors named. So at the passing of the last account holder, those successors could take over the account. And on our forms, it allows for, I believe, up to 4 successors, but we've had many custom plans where we're able to kind of paint outside the lines a little bit and add additional successors.
Thank you. Another question related to donor advised funds. If someone would like to make a donation to an international charity using their donor advised fund, is that possible? And how does Schwab Charitable assist with that?
Another great question. So we do have capability to make grants outside of the United States, and many of our account holders pursue this activity. And the way Schwab Charitable approaches it is the path of least resistance. So for some foreign nonprofits, they might have a US-based 501c3 specifically set up for fundraising purposes to make it easy for clients within the United States to make charitable gifts to that foreign entity. Second path that we would look at is for a charitable intermediary. So depending on what part of the country, or I'm sorry, what part of the world the client wishes to support a charity in, there are intermediaries that are set up in the United States that can accept the charitable gift. They do charge a fee for that service, and then make the distribution out to the international organization on behalf of the client. And then finally, third, if there is a charitable organization that's outside the United States, does not have a US-based 501c3, is not working with any US-based intermediary, we do have a direct global giving program that clients can participate in. And this essentially requests that Schwab Charitable do enhanced due diligence to seek an equivalency determination on that organization abroad to see and determine whether or not it would qualify as a charitable recipient. This, again, would be kind of the third step in our protocol of looking for how to get money to charities outside the US, because it does have the highest fee associated with it. Once that organization is vetted and deemed qualified, future gifts will be easier to make. It's just that upfront due diligence process that requires the extra effort.
And then once that due diligence is completed, is that charity then added to the drop-down menu on the online portal for the giving, or is it another route?
It would not be added to the drop-down menu. That one's for US-based 501c3 and eligible organizations only. So international gifts always are going to go through a special handling process just because of the complexities and ever-changing nature of tax laws and making sure that gifts are made in the appropriate way, which is really a benefit to the client. So when you're making gifts in general, whether you're writing a check or transferring stock to an organization, you're acting on your own best interest, you're doing research yourself, but really, there are charitable organizations out there that might not be in good standing with the IRS. And any gift that you make out of your Schwab Charitable Donor Advised Fund account, we're going to make sure that that is an eligible organization, that it's in good standing with the IRS, that it's a valid charitable organization. So there's no chance of sending money to a fraudulent organization, if you will.
So logistically, someone who wants to make an international gift would contact, if you're working with a Dowling Yahnke advisor, reach out to your advisor or reach out to Schwab Charitable directly.
Correct. Yeah.
Okay, great. And related to that, for someone who has perhaps some more complex assets, not appreciated publicly traded stock, but something that's privately held or illiquid or real estate, something along those lines, that they would like to see about donating to a donor advised fund, how would they go about reaching out to talk through that process?
So they can reach out directly to their advisor at Dowling Yahnke, and I would hope they'd give me a call. And myself, we have a team at Schwab Charitable called the Charitable Strategies Group. And this is a team, there's attorneys on the team, and they specialize only, their objective is helping clients with the acceptance of illiquid gifts. So again, that could be real estate, it could be cryptos, it could be business ownership, privately held stock. And we can do due diligence review on those assets to see if they would make a good charitable gift first and foremost. So we're always looking out for the client's best interest. Clients do need to seek tax advice themselves from their tax professional, but we can point out some things that say, hey, you may want to ask about, the debt associated with that asset, or you may want to ask, there's multiple owners of this asset, or, pointing out different tax characteristics of the gift. But our charitable strategies group is there to help. They can work directly with the client. If there's company counsel involved for the sale of a business, we get in contact directly with company counsel. And we can help you start to finish through that process.
That's great. Thank you. Thank you so much for all of your time and wisdom today, Shawn. I really appreciate you joining us for this. And thank you to all of you in the audience who have joined us, whether you are watching live with us or if you are watching the recording after this webinar. For any questions we were unable to get to in the time we have today, someone will personally reach out to you after this event. And if you are watching the recording and have questions, please feel free to reach out to us and we will help you however we can. I wish you all a wonderful day. And Shawn, thank you again.
Thank you so much. It was a pleasure.